Hello, we're going to show how to specify partial ownership among parent and child companies in an entity group so that the B2T engine can automatically take into account the ownership factor when performing tax consolidation for the group. In an entity group, a parent company may own less than 100% of a child company, and so the child company's tax contributes a smaller portion to the group's total tax expense. The B2T engine would automatically account for the partial ownership as long as the user specifies the ownership percentage between a parent and a child company. How can we specify the ownership percentage in the input file to the B2T engine? Let's take a look at a simple two-entity example. So here's our example where we have a parent P that owns a certain percentage of a subsidiary sub 1. And here is the corresponding input file where both P and sub each had a $1,000 revenue. And in the setup input sheet, we have two entities, P and sub 1. And P owns sub 1 in this group 100%. So here is the ownership percentage. So let's do a quick calculation and see where the ownership percentage is being considered. So we're going to submit to the engine, and the engine starts up code, so it may take a few seconds to warm up. So it's down. Let's go to the output file and take a look. So here's the output file, and we see the engine did two calculations, one for P and one for sub. Both have 210 total tax expense. Now, let's see in the composite provision summary, we see the total tax for the group is including the contribution from both P and sub 1. For P, it takes 210, and for sub 1, it also takes 210. And we see this important ownership factor used here. That's 100%. Okay, so we go further into the provision sheet for the sub 1 calculation, and in the key output section, the ownership fact is shown as 100%. This is the portion that this entity's tax contributes to the group's tax expenses. So now let's think about this. What if P owns less than 100%? How can we tell the engine that the ownership is less than 100%? So let's go back to the input file. We close the output file. And here's our input file. And in the setup input, we said that P owns sub 1 100%. Now we're going to say it's 50%. We say 0.5. And the voting ownership, without knowing anything more, we just say they are the same, also 0.5. So that is it. We tell the engine that the ownership is less than 100%, and we're going to save it. And we're going to the recurring input sheet and send it to the B2T engine to do the calculation again. And it is down. So we go to the output file. We open the output file. So here's the output file. We see the sub 1, the total tax is still 210 by itself. However, we look at the contribution from sub 1 to the whole group's tax consolidation. The ownership factor is half. which makes sense because P owns only 50%. The other half is owned by somebody else. So the tax impact is now 105, which is 50% of the 210 over here. And we go to the provision sheet of sub 1 again, and we see the ownership factor now is 50%. This is how much the sub 1's tax contributes to the group's tax expenses. So here, one may further ask, what if there is a grandchild company? Let's say sub 1 also partially owns yet another company. Let's see how that's going to work out. So we close out this output file. We don't save it. And we go back to the input file. And in the input file, we're going to say that there's yet another company that's going to be owned by sub 1. So we have another company. Let's just quickly add another company. Copy and paste. Let's call it sub 11 or sub 11, which is also US company, is USD. And further, we're going to say sub 1 owns this new company also 50%. So we're going to copy and paste. So sub 1 and owns sub 11 in this group. And the text, of course, we're going to change it accordingly. Sub 1 is parent of sub 11 and still owns 50%. Okay, so sub 11, let's say sub 11 also has a revenue of $1,000. So we go to the recurring input sheet and we're going to add another record. Copy and paste. So sub 11 now also has a revenue of $1,000. So that's it. In the group now we have 3 entities. P owns sub 1 and sub 1 owns sub 11 as we specified in the relationship record. Okay, so now we're going to save it. And we're going to the recurring input and we're going to use the easy button to submit to calculate again. So it's down. Now let's open the output file. Now the 3 entities are all calculated. Each has $1,000 revenue, and so therefore the tax by themselves is 210. Nothing surprises over here. But let's look at a composite provision calculation where the tax consolidation is down for the whole group. There are all kinds of things. But for our purposes, let's focusing on the sub 11. This is the tag. The ownership is now 0.25, which is 25%. And the value is 52.50, which is 25% of 210. So sub 11 is owned by sub 1 50%, which is owned yet again 50% by P. So its contribution to the group is 25%, which is 50% of 50%. And we go to its provision, sub 11's provision, and we see the key output, the ownership percentage, 25%. And that's for the entity 11. So therefore, we see that the ownership factor of each entity's contribution to the group is automatically calculated by the engine. The user do not have to worry about them at all, as long as he put the ownership percentage in the input file, like this over here. So to summarize, as long as the ownership percentage is provided in the input file for the parent-child entity relationship records, like we did over here, then the B2T engine will automatically take into account any partial ownership situations in its tax consolidation processing. That's it. Thanks for watching.